Okay, so we're going to look at trading. What coin would you like to look at today? Any particular coin?
How about MATIC?
MATIC. Okay, let's have a look at MATIC. So let me pull up MATIC and then I'll share it. Yeah. Okay. I have MATIC already set up, I believe. All layouts, and then put in MATIC. There's MATIC there. Okay. Okay. Now I'm going to share the screen. There we go. Oh, there's price action there. Okay. Look at that came down even lower. Let me clear this a little bit. Let's look and see where it went. So now here, there's that drop. There's that big drop that the market had. I'll tell you what I'm looking at here is I'm looking at why did it go this low? Why did it go this low? So then what I do is I'm coming back to a previous bottom. So there's a previous bottom. So there's a wave working up, and we're on the 1 hour. So if I go from the top here with the fib to the bottom here, is this lets me make sense of the chart, yeah. So now doing it from here is you can see you hit the golden pocket. It came down to the 702, but it didn't make the 768. So now I think I need to tidy this screen up a little bit. So now why would I have a I'm trying to remember the last time I did MATIC is I put these triangles here, and they were still being mapped out, but I basically put in a bottom and a top, and you can see how close this came to the bottom. So I wouldn't have anticipated that looking at this arc. So that's why when it came to the bottom here, I said, okay, you got to pull it back to another bottom, a bit, because there's a bigger swing going on here. And again, if I was paying proper attention to a coin, is I would be doing this looking for a better confluence, or to double test my targets. Now again, I was just doing this by eye, So another thing I would have done is there's the bottom to the top that gave me this is now here's a correction, and then here's another bottom to a top, and then another Elliott wave. So I would also do this here. Here's a bottom to a top. Okay, so now I went from here to there, from here to there. It's pretty much the same, really, isn't it? It's exactly the same. No, it's not. It's not the same. Can somebody knock?
Can open the bay door and put it inside.
Okay, can somebody knock off their mic?
We'll fix it tomorrow. Or if it's easy to fix it.
Farouk, stick on your silent your mic, please. Ah, there we go. Thank you. Is it this one? Oh no, it's not. Is this one? There we go. There we go. Okay. Sorry. So let me just go back again. So I'm measuring from here to here. So then the fib top to bottom gave me here is this pretty much came back down to again. So I'm repeating myself here. Is then this one from here to here. So now from here to here. So from here to here is I'm checking this, and again there you go. So I'm going back to make sure why did I put the arcs there and not bring them lower down. So when I was doing this last time, is I would have marked the fib from the top here to the bottom, and then I would have looked at the potential fibs here. There's a 702, so that's why I brought the hour, the red one, down, and then the 15-minute down to here. Yeah. So that was my thinking, where realistically or more appropriately is from this top down to this bottom, down to here. Was more appropriate. Isn't that right? Let me just double check. No, this bottom, all the way down to here. There we go.
Well, that's where I actually jumped in, actually, so that's quite good to know.
Okay. Say again. Where did you go in?
184.
184.
So, 184. So the 65.065, the golden pocket.
Oh, very sweet, very sweet. Okay, so you're in on a lot.
What I'm looking at now is obviously it's jumped up and it's got this sideways action going on.
Yes, yeah.
I took half out already.
Very nice.
And moved my stop loss up, but I'm just thinking if we're expecting the stuff to drop down.
Yeah, well, let's have a look. Let's have a look. I'm just gonna. I'll clear these out for now. I'll look at the 1 hour for now. Yeah. And let's have a look. Let's have a look at this. So we'll pop in some tags just to help us map it out. Yeah.
Yeah.
So there's the skyline. Okay. So we don't.
Yeah, that's what I say.
Yeah, we don't need to map them all. So look, there's one. So resistance peak, mid-range high, and third spike. Okay. Now we can also map it out as a. We can also map it out as an Elliott wave. Okay, so now I'm going to turn her upside down. Just makes it a little bit easier. So there it is upside down. Okay, so now here we have the here we have the 1, 2, 3, 4, 5 peak. But now let's look at the conversation we had last night. Is you've got that initial 1, 2, and look, there's that first breakaway. So 1, 2, there's 3 moving away. You always get that moving away. Look, it come up here, it did a load of sideways. Again, look, there's that W, is that space that it's creating. Look, and again, this is there's lots of sideways going on the market at the moment. So this feckin' sideways here as well. And then you have the scooping. 1, 2, 3. Even the little one there is after all that scooping, when you get the retrace, is 3, 4, 5. So again, that fits into what we were saying last night about visually following it up and just recognizing the pattern play out. So it helps. It helps with getting the measurement. Yeah. So now I'm going to put the fibs back on again from the bottom here to, sorry, from the top to the bottom. And again, the reason being is because this is the dominant wave that's moving up. Yeah. This is its correction. Okay, so now if you look at what we've done is there's the skyline, there's the third spike, here's the Elliott wave on the way down. Is now the question is this a complete A, B, C, or is it A, B, and then there's a C coming down? So that's one of the questions we're asking. And then also is how high is this going to go? Because what's coming up here is mountain peak.
And I'm kind of looking, it doesn't to me look like there's many scoops yet on that one.
Yeah. Well, there you go. That's where it's going. Now you know where I'm going next. Is now let's do the fib on this. See what the fibs will tell us, and then we'll follow the scooping of it. So look, this is an Elliott wave in itself. Down. Okay. So now, if we put from the bottom to the top here, and again we look where the fib is here's the fib kicking in at $2.26. So let's just put a marker on that as well. Let's just put a price label on that, and we'll put it here just to put it out of the way. Yeah. So we just know that's our simple mountain peak measure. Yeah. Now we also got a very basic, simple and straightforward. Is where is the support and resistance line? So I'm just scrolling back. I'm just scrolling back to see here. Now I'm going to put this under the 2 hour because it's hard to fit it all in. And now I can see. Okay, now I can see. I just want to get this peak in. I'm just checking where is support and resistance. Okay, let me do it here, and then I'm going to back test it. That's really what I'm going to do. And again, I think it's pretty obvious that you can see here. Look, you got this here, and then you've also got it here. Yeah, that's where the body is. So just a quick look back, just to see is when it meets price action again. Is okay. Yeah, there's a turn there. There's wicks. Yeah. I'd like more touches, but let's go with it. Yeah. Now I'm also looking for a bottom. So this here is again, it's already set, is a bottom, but it wasn't the bottom we're looking for. So let's see. Let's go for another one. And then look where price action came down here. So again, that's where bodies are touching there. Maybe we need to bring it a little lower. I'm looking at where the bodies, the wick and the body of candles meet for this one. Touch, 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 touch. There he goes, resistance, support. Okay. So you can see that the support and the resistance in this channel is, or in this arc, is fairly dynamic. It's a nice wide one, yeah. Okay, so now is what's this telling us? Is we have a new Elliott wave coming up. Is the fib puts it at the golden pocket puts it at 226. The support and resistance is at 237. Okay, so there's a bit of space in that. Is I could be a little bit more conservative and bring this down, and I'm looking at more touch points here, even some more touch points here. So I'll bring that down to 235. So now we're going into have a look at this Elliott wave, yeah. So now it's on the 2 hour. Let me go back to the 1 hour. Okay. Yeah. So again, here's, and this one looks like possibly here's 1, here's 2. Here's the push away. Again, you got this retrace. This retrace. Now look at this. You see this retrace comes down and it breaks this. So this can't be 1. So we got to go lower, because again, you see this. We have to get it below this. So again, maybe it's a smaller 1, 2 here. Then here's 3 moving away. It drops, pumps up again. Again, that looks like it's the W. As messy as it is, it's that big drop, and then it lifts. It comes up again. Yeah, there's definitely a little bit of scooping here. Then you got this sideways action. It's possible that this here is the maybe this is the top. Do you think that this might be the top? If I went into the 15, again, there's the 1, 2. Again, messy. See the messy sideways here, but then there's that move away, and it collapses in.
It's that bit there that's thrown me. That bit where it collapses.
Yeah, well, yeah. Sometimes that happens. It's, yeah, you get really big retraces back at times. That's part of it. There's definitely a bit of scooping going on here. Partly why I'm thinking about this is I'm also looking. I'm looking at the XRP. Is XRP again is peaked peaked and doing something very similar, where it rather than having its correction where you'll see the drop and then it works down, there's all this sideways here. There's all this sideways here, and again, to me it looks like it's part of the correction coming down. This looks like again it could go down. I'm not looking at the moving averages, so maybe I should look at the moving averages. Let's put a couple of moving averages in just to have a look. So,
Right.
Yeah.
I got a question. I've like charted it.
Yeah.
I'm a complete beginner. Could we be halfway through wave 3?
This one, wave 3 here.
This, all this like, so we got at the where you finished the last Elliott wave 1.
Hang on one sec. So now you're talking.
It would break.
You're talking about
it
this.
would break out. It would break out to this triangle. Is that possible?
Yeah, you're talking about this being halfway through wave 3.
Yeah, so we've had 1 and 2, and this is just this is halfway through 3.
Yeah.
I'll get you as well.
Yeah. You mean it could go further?
Yeah.
Yeah, absolutely. Yeah, I'm trying to. Well, that's why I want to look at the moving averages, because the fibs would have it up around here. Is the support and resistance? If you look at it came into this channel, it touched it, spiked through, but came back and set on it. It went up, it touched it again. Look, it broke through, but look, there's support and resistance here. Broke through, came back. Look, resistance here. Touched it again. So again, the potential for it to go up here is there. However, this is also, you see this here? It also has shown a little bit of history where sometimes it just comes to here. So if you look at this and you look at this, is you can put a, there's a commonality in that. There's a part in that. So it peaked. It dropped, it came up, but not as far. Again, it dropped. It peaked again. It dropped, and again, it's back to, I won't say midline, but 2/3 of the way. So this could be the peak of it, and again, it's working its way down. To be honest, I think it is. To be honest, I think.
It's tricky. I just wanted your opinion on it, because I've been looking at this thinking,
it should be going up
I
here.
can bust through for all-time highs now.
Yes. Yeah,
it's going against the grain, isn't it?
Well, yes and no. Yes and no. You see, if you, yes and no, because this, look at this here, like it's already proven that it comes to here and then it comes back down. So
that was one of my questions. You see, because there it's kind of pumped up quite a bit. It's almost like it's gone up too quick to do the scoop, so it's missed it. It's just gone straight through it.
Well, you see, if we're looking on the hour, but if you go down, if you go into the 15, if you go into the 15, you'll see. Maybe I'll go into the 5. Might even definitely give more detail. I get it. That is scoopy. See the way you get the lift and the drop, the lift and the drop, the lift and the drop. But now the question is does it look nice? No, it doesn't. Is it a clear confirmation that make it easy for us to read it? No, absolutely not. When you look at it on the hour, you're not seeing it there at all. The thing that's sort of giving it away to me a little bit is you see the wick, see the way the candle wicks up, and then it drops back. This candle changed. This candle changed, and look, it dropped. It went down before it went up. So again, it goes up, it wicks down, a new candle wicks down a little bit, and then it goes up. So you can see that's that scooping That's that scooping. So when I zone in or
Okay,
zoom
yeah,
in, you see it on the lower time frame. So sometimes if you're looking on a time frame and you're going, I'm not seeing it there, zoom in, see if that'll give it to you. Yeah.
Yeah.
So now.
Yeah, I didn't zoom in. I didn't, but that does make a lot of sense. But never mind.
Yeah.
Next one I hope it passes through.
Yeah.
It's just messy now. It's just messy, like
it is. Look, you see this here? Killing me.
it's like
All
XRP. That's what made me take my money out. To be fair, I took half of it out. I was just looking at it, thinking.
Yeah, I think it was a good call. I think it was a good call. Let me have a look at you know, let me open up it rather than doing it here because there's all other work here. Let me bring in my let me bring in my whatchamacallit page, my moving averages page. Where's my moving averages page? I'll bring it in and I'll switch it over to MATIC and we can have a look. There's my indicators there. Okay. I'm going to bring it over to here so you guys can see it. So there, that should work. Okay, you can see the green page now? Everybody can see that, yeah?
Yeah.
Okay, all right, super. Okay, so let me change it to MATIC. MATIC USD. Are you guys leveraging with Bybit?
Yeah.
Okay, so there's Bybit. Okay.
No, I'm not at that stage yet. I am. I'm just in spots.
Very good, very good. Okay, so now let's have a look. And I know this might seem messy. It's like looking at my bedroom all messy. Forgive the mess on my room, but it's not. It's not messy. It's just all these here. Let me blow it up so you guys can see it clear. Well, actually, I'll do this first. I'm going to have a look at I might as well show you the full process. I'm going to have a look at the RSIs. Okay, so now the RSI for the day, see this here? It's down. There's a sharp turn on it, yeah? It's not. It doesn't mean that it's going to be drastic, but the fact is it's down. It's not deciding which way it is, yeah? So then I'm going to have a look at the 12 hour. 12 hours down as well. So now there is the 12 hour now. And there's the 12. So the 12 hours been down for the day as well. And what I was checking for is that maybe the first half of the day is down and then the second half could be up, which is indicating that the 12 hour is being pushing up. It hasn't. It hasn't. Just looking at the 8 hours down. The 4 hours down, which is going to be down till 12. The 1 hour for sure is down. Now, if you look, the previous hour was up and the previous hour was down and it was a strong down. So you can see the trend for the last few hours, yeah. If we go in a little bit more local, the half hour is up. The 15-minute is up. So again, we're looking at a retrace on the hour. While the hour is down, the half hour and the 15-minute are retracing. Okay, so that's them there. So that just gives me the story of the day. So again, look, here's the hour. I'll blow this part up. So the red candle is the hour. And again, remember, strong red candle down. Okay, and we'll zoom into the half hour, because remember, half hour is retracing. Look, there's a retrace in the half hour. And then the 15-minute is retracing as well. So look, there's a pivot on the 15, so strong down pivot, and then here's a retrace on the 15 minutes. So the RSIs and the 15s are and the half hour. You can see how the the story plays out together. So now we got to look at what's going on here. Here's the peak. Here's that peak where we're talking about the scooping. Here's the peak. Dead cat bounce, retrace. Okay, comes back up, is resistance peak. If we're following through on it's an Elliott wave that's going to start heading down. It's touched off. If you see these lines here, these are the Bollinger Bands. So again, they're a series of moving averages as well, and they're like elastic bands, and you'll see them on the edge of price action, up and down. Price action has a tendency to look at the sideways, bounce up, touch, goes to the top, touch, comes to the bottom, touch. Now when it decides to break out, it stretches it up. It reaches a limit, goes sideways, look, now it's pushing it back down. Now there's a bigger push up, touch, going sideways. Look, here's the peak that we're talking about. Going sideways, it touches off it again. And look, it's pushing it down. And here we are hitting off it here and hitting off it here. So you can see potentially it's looking for another push down. So when we zoom in, is you can see that the VWAP is here, the yellow line, the VWAP, is once you see this orange line, which is the 5 MA, and the blue line, this is going sideways a little bit, or neutral, but the orange line is breaking through the VWAP. So that indicates a spill. The black line here, see the black line? The black line is at 20 MA. Maybe I'll change the black. I like black, but maybe I'll change it. Where is it now? Maybe I'll do it this way. Settings. Pink. Okay, I'll do pink for now. Can't miss it. Okay. So now the 5 is crossing the VWAP. Is the 20 here, you can see it's peaking and it's turning a little bit. Even the 10 is turning. Here's the 20 EMA, 21 EMA. So you can see that this candle is pushing through. It already tested the Bollinger. Look at this rejection. Is back again, and now it's coming back down at it again. You see this line here is called the medial line. This red line here, the medial line. There's the Bollinger at the bottom. There's the top. Here's the midline of the Bollinger. So once you see price action break the medial, it always has a tendency to go to the other end. The fact that it's come up, spiked through, but not got past it, and look at here, the medial line at the moment is a resistance line. It's pushing down again. So now you have the 20 EMA and the 21 EMA is trying to get broken. And the same with the 20 here. So when the 20 gets broken, it's always going to be a big drop. It always means that there's more to come. It's very seldom you get to 20 breaking and it turns and goes up. Normally when the 20 gets broken, it continues down. Here's the 200 MA. 200 MA is also on the way down. So here is the 55 EMA and the 50 MA. They're coming up. And again, it looks like the 200 is coming down at the same time. It's almost like when they cross over, they'll neutralize each other. That gives the MAs up here a bit more strength to push down. So the 200 here is coming in, and it'll weaken these. It'll stop these from pushing it up. So it looks like it's going down. To be honest, it looks like it's going down, and it looks like, back to this one. It looks like, again, what it's doing, it's mirroring this pattern here, and that we're coming back down. and it looks like we're coming back down to at least this line. So I would suggest it might be a good position to take your profits. Yeah, if you've taken 50%, is before this gets broken proper, is take the other 50%. So now on the bigger picture is where is it going? On the bigger picture, where is it going? And again, what I'm going to do, because I've got all these here. Normally I have my arcs all in separate things, so this is a little bit confusing. It's hard to read. So what I'm going to do is I'm going to open up another MATIC page so I can just see it clearly. When you can see it clearly, it makes all the difference. So for anyone who went in on that trade and found the bottom and went up, congratulations. Nice trade. Okay, so now I'm going to be quiet for a sec because I was going to let my own bias there talk. So okay. Okay, I'm gonna switch to MATIC on MATIC and Binance for now. Yeah, I want more of the history. I want more of the history just to get a sense of it. Yeah. And again, I'm looking for context. I'm looking for context, and within that, I'm looking for where is this going? So until I have a better context, I'm not going to feel comfortable. I'm not going to feel comfortable setting targets. Yeah. Okay. So this is the 1 hour journey as it's going. Yeah. And again, I'm looking at the bottom here. That's why I went to here. Okay. 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 So now here's an Elliott wave up. Look at how volatile that is. The mess of the look at this big hole here. Look at this big W here, scooping here. Finally the peak. If I do the bottom to the top, again, look, we would have got that, but that wasn't correct. So here's the bottom here. Okay, that was spot on for that one. There's a 0.5. Okay. Now, I'm going back to the 2 hour again so that I can get a better sense of this. So I think what's going on here is just on the bigger scale of things, on the move that MATIC is in. This is on the daily. Is Elliott wave here is 1, 2, and this is 3. And 3 is still on its way. Like this is only getting going, so to speak, in where MATIC is going to go. I think the 1, 2, and again here's the initial movements of 3 getting going. Yeah, and it's the same with Ethereum and Bitcoin in ways, and they're having a big retrace. They're having a big retrace. So now I'll tell you what I'm thinking. I'm looking to think about it coming down and doing a double bottom. There's this Elliott wave here. The correction of it will be around here. Like if you just measure this Elliott wave, the correction of it will be around here. And I'm thinking that this is probably going to come down lower. And I'm looking to see where I can get a measurement that gives me a really solid look at that. So this is why the 1, the 2, and then here's the 3 going off. So I think this here will give me the best measurement of this retrace. Of this lift here is it's almost like this in itself is an Elliott wave. And I'm sure it is if I mapped it out. And then it's having its own correction. I could be wrong on that, but I'm going to test it. And this is why the zooming out is while I'm mapping out the hour, is I'm looking at the 4 hour here, I'm looking at the daily, I'm just not arcing them out. So now is this wave here, its correction is if you look at it, it could come down to a 618. And it's already come down to the 0.5. So could do that. You can see, look at the support and resistance here, support and resistance here. Then it's moved up to the 0.5. So now you can see the next level up is support and resistance. So it makes sense that it now hit here again because it's gone up a level. So if this is going to come down, well, it is going to come down, is it'll hit the 382. Is if it wants to break the 382, for sure I think it's going to come to the 0.5. Okay, now that's just on this Elliott wave and its ABC correction. However, there is this Elliott wave and its ABC correction. So now if this is coming down and this is A and this is B, and it's going to stay within, the correction is going to stay within the arc. It's going to stay within this here. It's not going to break down. It's not going to spill and MATIC is going to go down even lower. If it's not going to do that, but it's going to actually come down and do something like a double bottom, is, let's see now if I put this here to there. Okay, now rather than just looking at the 106 here, which is, again, it came down a little lower to the 702, it's back up to the 382. Now, A, B, and if this is not going to break out of this arc but comes down and stays within it, is I generally look at this the 786. Now, this is also the same strategy that I've done with XRP, and it's brought me to 0.65. So that's why I have my short target at 0.65. So I would suggest that with this coming down, I would be looking at this target here. I'd be looking at it coming down to about $1.68. $1.68. Is I think this Elliott wave here, the correction will come down to at $1.88, but I think the bigger correction, the bigger correction of this wave, and then the A, B, C of this wave, I think is most likely going to come down to the 786 at 168. It might come all the way down. Not one, because that's a different. Yeah. Oh well, okay. Yeah. If it wanted to, it could come down to 05. I think the 768. I think the 768. I know. I'm saying a lot there. Am I making any sense to anybody?
Yeah, no, that makes sense. I mean, I was just, I think I had it at 170, so not far off what you were saying there.
Yeah.
I was just trying to work out if that actually is Mountain Peak, if it's reached it.
Oh, this here.
Yeah, that's kind of what I was. Is it going to just pop up a little bit more, or is it?
Yeah, I think
and then, like you said, because of my charts on XRP, it's kind of pointing that it's going to be going down. So I'm just looking at the same.
Yeah, I think. So no, you're talking about MATIC now, still, aren't you?
Yeah.
Yeah. I think this.
Right. One thing I have noticed.
Yeah.
I don't know if you want to run your eyes or it's just I don't know how I'm going to get it over to you. On the 4 hour.
Yeah.
You see, you got the W there.
On the 4 hour.
You can see the W right now. Shall I send to you and you can have a quick look and then maybe work it into this?
This here?
Yeah. So from the top, if you put a trend line, going from the W, go to the left now, up there, put a trend line down to where it's more or less where it more or less is now.
Like this?
No. To where the price action is now.
Like that?
Yeah, there, yeah.
Yeah.
And a line on the bottom of the W.
Okay.
But that one's finished now. That's good. On the W, at the bottom of the W now. Yeah, so it's going like a bull pennant. That's got to come to that.
Okay.
Do you see where I'm going with this?
I do. Well, it's a channel more than a bull pennant because this is too. This would be too short. Right.
So see with the bottom yellow line now. Can you bring the right corner up to a point?
Here?
Yes. Bring it up.
Oh, hang on now, because I think this is relevant. So let me leave that in. But
all right. Okay. Yeah.
Are you asking me to do something like this?
Yes. Right.
Okay.
So if come up.
Yep.
To the top left where you've put the first one in.
Yeah.
If it's resistance, if come back for support, created that W, there's a fake out.
There's the fake out.
And then it's gone back in.
Back tested it.
Yeah, and now we're going to the support right at the bottom.
Here's this, yes.
Now we go breaking out now. If we back test that on like the third touch, could that be?
And a breakout.
Yeah, that's something where like exit strategy, like shade. That sort of movement.
Yeah, no, it's not going to do that. And I'll tell you why. No, I get your logic, and I think you're onto something here what you're reading. But the reason why it's not going to do that is you got to think about like there's a bottom. So here's a main Elliott wave. Does that make sense? It's come in itself. It's complete and it has to have a correction. So sorry, let me correct myself here. Is you see if you look at the pattern the way you see the way the pattern is flowing up. So here's a wave. Here's a wave. So here's an impulse, a wave, smaller one, impulse, wave, a smaller one, and then an impulse again. So this is the next impulse up. Do you get that? So now with this impulse up, it has to have its correction. So this isn't, its correction isn't complete. You're going to have a second wave, comes up and then comes back down, is to complete it. And the fact is that when you look at the pattern, is this wave is sort of a gradual. So look at the correction here is not so volatile. You know, this wave is look, it peaks, takes a lot of the blunt out of it spiking down. Where again, this wave is look at the volatility in this. So this is where this one's a little different, is look at how much this comes up and look how much it comes back down, and then the volatility of that up there, you're going to get volatility in its correction. So you're going to get this coming back down. So you're right in that it is going to go up. I definitely don't think that the breakout of this arc is going down. But the correction of this is here, is I think there has to be a down here. And again, you're getting the waves. One, you have to get a second one. You might even get a little third one before the breakout, or 1, 2, and then the breakout. So your thinking is correct. It's just you're not allowing for, there has to be a second wave. You understand? So
I just wanted your take on that. It makes a lot of sense. Playing itself out. Yeah. But I just did want to bring that to your attention, just to see your take on it.
Yeah, you're spot on. You're spot on. So now, again, it's quite possible that it will come back in. I think it will come back into this channel. And again, you might find that this stops it here, this support here. Or you might find that it gets a spike through. It gets a spike through. Now look at the touches here. Look at the touches here on this arc. 1, 2, 3. So this is also a confirmed support line. So it's quite possible that again you get the breakthrough into the channel, and if this doesn't stop it, this one will. So it's either going to come down and touch here or touch here. I'm guessing it's probably going to probably come closer to here. You might get a spike through. Is more likely. And again, you're getting that coming down. So now let's go back to. Actually, we'll do it here because this one's cleaner. This one's cleaner. So we have where is it? Call it. So we have a skyline here. Is we have third spike here. Okay, so now along the way is first spike, second spike, third spike. I'm going to bring it back down to the 1 hour. Is part of what you're looking for in this is resistance peak. Is when you get this spike, is there's always a bigger body of movement here. That's how you know it's mid-range high. Is there's always this little lift before you get the drop, which are the scoops. So the big W part of the Elliott wave, this is mid-range high. See all this scoop here? Always at the end of mid-range high, you get a lift to get a drop, and now here it is coming down for third spike. So literally 1, 2, 3 steps down, and that's the Elliott wave. Yeah. So we've got that confirmed. Is now when you get the spike, is look, there's a lift here, and a double top. So double top, first drop. So now we have first drop in as well. and we have double top. Now, one thing this is telling me, and here I am doubting myself again, is that if this is mountain peak, it's very low. It's very low.
That's what's got me.
It's very low. It is. It's very low. Well, it's not. It's also normal. Is you can get low mountain peaks for sure, without a doubt. You know, without a doubt. But you can see how all this volatility here is you're getting look at the smaller, look at this, all this big volatility. Look at this volatility. It's mirroring it. It's mirroring. See here? This is a mirror of that.
Yeah, that makes sense.
Does that make sense? There's a mirroring of that, yeah. So now is, again, here's the lift here. Here's the lift here. And now here again is we get the drop down. So you can see that this is a smaller version of that. So now that would settle me with regards, okay, it's still, we're in place. It's just, this is mountain peak here. This is always the challenge with reading them, you know. Mountain peak. Now again, I'm going to go back into the moving averages. And let's say I want to double check, because it's like, you know, as much as I can see all this, you know, and Miles, isn't it? Miles' channel. Miles, yeah, a very nice spot on the channel. There's the support. I think one of these, again, one of these is our target. One of these is our target. And you got to remember is when anytime you go to a bottom like this, the impulse waves like to return very close to the bottom, but not necessarily break it. So again, it's coming down here. It's already come here. It's sort of telling me it wants to go a little lower. So again, I think this could be more realistic, this one here, than that one there. I believe. But let's have a look. Let's have a look at the moving averages. Okay, now what I'm going to do is I'm going to go into the 5-minute moving average. Okay, I'm going to go into the 5-minute moving average, and let's have a look what this tells us. So now on the 5-minute, it's like a micro indicator of where the rest of the pattern could potentially go. There's the VWAP. I'm always looking at the VWAP. Now the VWAP, look at how straight the VWAP is. Look at that sideways. Look at all that sideways. Look at that. You know, of all the price action that bothers me, the only one that really annoys me is sideways. It's like, you know, just it's like a time waster, you know. So there's all that sideways. But look now, it broke it. Look, I know it dipped here. I know it came here. But this is mountain peak. This is mountain peak. Here it's come up. It's resistance here. Look, resistance. It's support here. And then it's playing both sides. You know, and then there's the push down, the push up, and then the breakdown. So now this is clearly broken down, because look, you can see it broken down, and then here's the back test, and look, it's been pushed down again. So at a micro level, this looks like the beginning of another wave. Is 1, 2 for a stronger push down. So look, there's the VWAP. Now what's happening to the moving averages? The 5 went on a run, and then it got tired. Look, they're hanging off. The candles are hanging off. The 5 turns. The 10 is following down, you know, and then the 20 is coming down. The medial line is coming down. This is 20 EMA, 20 MA. The fact that you see the 55 and the 50 coming as well, even though it's on the 5, they're still willing to come. They don't move so quick. So I know it's the 5, but they're still willing to move. So everything is looking like a spill. So you look, here's the 5 come, turn, the 10 is going to turn, and again the wave trend is here, which is indicating that there's it wants to go down more, yeah? So 1, 2, and it looks like it's going to go on a run here. So, but that's the 5. So we can't make a storm in a teacup anything bigger. It's still only the 5. So let's go to the 15. So the 15 is, again, there's the drop, here's the retrace, here's the drop again. If you look at this one, the 5 here, when the retrace come up, it was the 10 that stopped it. Look at that spill, there's the 5 pushing it down. 5 is only still getting going here. The 10 is in there, the 20 is in there, the medial is in there. It's breaking the 111 pi here. It's after breaking the 100 MA. So they're big. I think that's the 144 actually. They're big ones to be breaking. And they're being broken by the 5, the 10, and the 20. And again, look at how they all cut through the VWAP. So now it's only the 15, which is the stronger indicator. Still only the 15. Here's the 20 MA as well. So again, lots of spill. And spilling breaking through. There's the 55 turning as well. Lots of spill going on here. But now they're only the small time frame, so you know an hour can decide to put a halt to all that pretty fast if it wants. So let's see what the hour wants to do. So again, go to the VWAP, and what's crossed the VWAP? 5 has crossed it. The 10 has crossed it. So you can see it's in a slower process of the spill. 5 is gone. The 10 is gone. This is a 4 EMA as well. I generally don't talk about it, but it's the 4 EMA. It's a smaller one. Here's the 20. So look, the 20 doesn't have to break the VWAP because it never got past it, but look, it's turning. So in the next hour, depending on how much this candle gets down, if it breaks the Bollinger here, it'll come down and it'll either spike to the 200 or the 55 and the 50. If it breaks the Bollinger, you'll get that spike. It's 5 minutes past 11. So it has 54 minutes to go. It's pretty much looking like it's gonna get past the Bollinger a little bit and get down, do a bit of a spike. If it does that, the question is after that, will it do a retrace? Will it do a retrace? Or will it's going to turn at 12 o'clock? When it turns at 12, will it continue on down and we'll get a much bigger spill? Yeah, don't know. But look at this 20 EMA is getting broken as well. So again, lots of spill action on the hour, and you can see it wants to go. So if it came down to the 50 MA here, that would be $2.06. $2.06. If we go back and have a look at this, where's $2.06? $2.06. $2.06. That's not very far, is it? There it is, $2.06 here. Okay. So again, that's not very far. That looks very achievable. So now let's go to the 4 hour. Okay, so now you can see here is again this topped. It was a turn. This tried to push up. Again, got rejected. There's a rejection. Here's a resistance peak. So you see it peaking again, a rejection. Look, rejection. It came up, it got rejected, but now look at this one. This one is finally spilling. So this is the candle that after the peak and then the cresting, you get a cresting, and you get the cresting, and then you get the drop. So now this is the cresting of the 4 hour, and then this is the drop candle of the 4 hour. So, and we know where we are within the peak of the Elliott wave, and now here we are on the correction. So we know that this is going to go. We know that this is going to go. So when we look at it, again, look, there's the VWAP, and then the VWAP has been the resistance here. as much as the MAs were pushing up to try and break it, is it kept getting pulled back down. So the VWAP was the resistance here. So now you have the 5s, the 5, the 4, here's the 10. Here's the 10 coming up. You can see the 10 isn't going to put up much of a battle here. This is the 100, I believe. Here's the medial line. So for sure, this is going to come down and test the medial line. And here's the 50 coming through it as well. So that's back at 206 as well. So you can see 206 is a definite target here. But the question is that if it gets past this medial line, the medial line, and it breaks these, the 55, the 20 EMA, and the 111 pi, there's definitely going to be a bit of resistance here. So it's quite possible that this 4 hour will get down to 203, and then you'll have maybe a retrace 4 hour, a retrace 4 hour, and then you get a push down again, and you can get it down to the 197. Okay, and then after that it's coming down to the 200 at 186, and there's the Bollinger Band. So there's the Bollinger Band. So now this could be the play of it over the next 4 hours, retrace 4 hours, 4 hours, 4 hours, 16 hours, 20 hours, possibly. Not unless it wants to do something greater than that, which is possible. So, and what I mean by that is this here. This here, you got this wave here. Here's the correction. Here's the wave. Here's the correction. You get a little bit of a retrace, and then you get the drop, and it just comes down. It comes down, and just you get the spike down. It doesn't have to be 16 hours. It could happen faster, and just get it done. Now, where can we see the potential of that? Where can we see that potentially happening? We've got to go to the later hours, yeah? So we've got to go to the later timelines and see what's going on there. So again, look, here's that peak and then rejection, and then here's the push back up. Look, gets pulled down. There's the VWAP, gets pushed up, gets pulled back down. And this is the 12 hour. So now the 12 hour is still cresting. Remember the 4 hour? The 4 hour is cresting, and then the 4 hour looks like it's in its spill. You get that spill coming down, yeah? But in the 12 hour, the 12 hour is still in the process of cresting. So you could get a drop coming down here. Again, look, there's 206. If it breaks this, again, you could be coming down to the 10 here. That's 200. You could get all that. God knows what's going to happen in the next hour. We may get it down here like the 4 hour comes down, and then what you do is you get the retest or the retrace of the 4 hour. The 12 goes up a little bit, so you might get a bit of a green candle up here on the 12 hour. But by the end of this 12 hours tomorrow, it turns around and it comes down, and now you get the proper spill. The 12 hour candle starts to spill and come down. So now that means that this 5 will do a little bit of a turn. The 10 will do a dip at 12 o'clock. We've got to see what happens with this 5. Will this 5 turn? Will this 10 dip? What's going to happen with this 20 EMA? It's pretty neutral at the moment. We got to see what's going to happen here. So that's on a turn essentially. Now let's have a look at the daily. Okay, so the daily is now, you can see there's a bit of sense here, why did this top out? Look at the 10. The 10 topped it out. A spike through and it got rejected. So that it was the 10. Now what's pushing it down? The 10 is pushing it down. The Bollinger Band here is pushing it down. So it, on the daily, came up, hit the Bollinger Band, came back down, hit the Bollinger Band, came back up, hit the medial line. So now the medial line is it couldn't break it. So it couldn't get all the way back up here, which indicates if the medial line can't be broken, is look, test it again, getting pushed down, is this is going to go down and it's going to push. It's going to push again. It's going to and it's going to push. It's not going to stop at the Bollinger Band. It's going to come down and have another go. Okay, so have another go at what? Is again touching it here, touching it here. Now look at this. The 100 and the 144 weighted actually is here. Look at how this here has been the support. Look at this, how it's been a support. How it's been a support. And here's the Bollinger. There's the bottom. It pushes down until it hits here. It pushes back up here. Comes down, didn't hit the Bollinger, but hit the 100 and the 144. It bounces up, push, 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 push. Down to the medial line. Retrace through the medial line down to, I should tell a lie. No, don't tell a lie, but I missed this. You push up, look. Now look, it pushes back down all the way to the support line. Now look, comes all the way back up to the Bollinger. And now it's coming down again. The medial line, retrace, breaks the medial line down to the Bollinger, back to the medial line, and now it's coming down again. And I would suggest is this is going to break the Bollinger and possibly come back down and test this line again. So I think the target is 160. Is if I was going to put a short in here, I'd be putting a short in for 160, 161. I think I said 168 earlier on. Okay, split the difference, 165. I think by the time this is done, it's going to come down, test this again, and that's when you get the double bottom, and then up it goes. I think that's what's going to happen. So now there's the 153. So now we're back on the 1 hour looking at it. See this line here? This yellow line is now what we recognize it as. This yellow line is this support line here. So you can see how they're starting to fit in together. So I would suggest let's work out what this one is. This is the 176, 184, 184, 180. No, but let's go to a different line. Let's go to the 12 hour. 176, 176, 185, 179. Okay. Because Miles, I think you're like the resistance line here, our support line here, is I think is relevant. So what I'm looking for is 176. I'm looking through the different timelines of the MAs to see what is 176. There's 186 on the 4 hour. $197. No. Okay. Okay. Well, actually, let's go to the weekly, just out of curiosity. There's the 10 at 180. There's the medial line at 171. Maybe it's the 10. This is on the weekly. Maybe it's the 10. Let's go to the 5 day.
This is good. This is all right. This is seeing you like in action, isn't it?
Yeah, yeah. Well, that's why I thought I just thought I'd just let rip and just.
Yeah, this is where like I'm probably like learning. Yeah, tuned right into this, like just letting you crack the whip and do your thing.
Yeah, because it's yeah. I just gotta go. I gotta because this is how I am when I do my own stuff, you know. So
yeah, it's good to see. It's good to see. Crack on.
Yeah, it is. Yeah, to be honest, I think I need to do more of it. I'm sort of, there's the technical where I'm talking through something and I'm explaining it to you, and then I really also need to just show, listen, this is how I use it, because there's so much more in that as well. I'm still looking for this 176 because I think it's 183, 170. Okay, I thought there would be a particular timeline that would have a moving average that would have a 176 on it or something. There's a 180, so maybe it's the 180. Okay, so now my basic conclusion is on the daily I can see this. I can see this playing out back testing into here. I can see it on them all, and this is the challenge when you look on the 1 hour, you don't see this. You don't see this potential. It's easier to see the pump. Is when you look on the 4 hour, again, there's, you might see some downsides, but you can see upsides as much as downsides. Is when you start looking at the 12 hour and the day and the weekly, is you get a different perspective, because rather than thinking about what's going to happen over today, I want to trade today. Okay, what's going to happen today? What's going to happen tomorrow? Is the daily and the weekly is also telling you what's going to happen over the next 3 or 4 days or the next week. It takes a bit of time to get them into your mindscape, but it's always good to start it sooner rather than later. I'm just looking at this weekly now. I've come back to this weekly now because I looked at this, and I'm looking at this here. I have to come down to come up. I have to come down to come up. And this has come up. So the question is coming down, is how much does it need to come down to come up? Now there's not much information here. And because they're the weekly, you can see MA is only come in at a certain point. So this is the pink one, is the 20 MA. So it looks like the medial line is the support line, the recent support line over the last 1, 2, 3, 4, 5, last 5 weeks, 6 weeks. The medial line has been the constant. And then you can see it come down at 173 here, 171. It's got a spike through there, 152. So there's an argument. There's an argument to say that on the weekly, is if it was going to break through, if you're going to get that breakthrough, is that this could be where the 20 becomes the support line on the. It can come down and nearly touch the 20 MA on the weekly, if it was going to do that double bottom, yeah. Anyway, okay. So I know we're going to go into setting a trade now, but has anybody any questions on what I'm going through? Any basic questions?
No, but cheers, Ray. That was really good. Thank you.
Yeah, you're very welcome. Does everybody see how the difference between we're setting up the arc, it's given us touch points, there's Miles dropping in the channel that's making sense of the channel of it, this is a choppy Elliott wave to read. Is this the top or not? Has to be questioned. Where do we get the confirmation for it? As much as this, we could measure out the Elliott wave here, I think we got the confirmation of it when we went into the MAs. When you look at the MAs, moving averages, and you see how on the hour, since the hour, the Elliott wave topped out, we're saying this is going into a correction now. And look at the MAs and how they're behaving and how they're now in a spill stage. So if the spill is looking really solid, is you know you're going to get this, as opposed to a drop, it turns, and then this could be 3, 4, and then you get a 5 up here. Is this firmly looks like it's heading for a spill. So now what also gives you indications that that is the case is remember I looked at the RSIs. The RSI is the hour is down. Oh. The hour is down. The 4 hours down, and they're solidly down. Like if this wasn't so solid, you'd see the angle of it changing. You'd see the angle of it changing. Like you can see some of the angles here, they don't have to be down so far. So the fact that this is down like this, you can see it's committed to it. And then same to 12, same with the daily. Is we had little retraces on the 30. Now look, the 30's gone our way again. That was a retrace, and look, the next hour is down, and so is the 30. Okay, the 15 is bottomed out a little bit. It's quite possible that this will continue down. It might. This is now. See this here? Is what time is it? It's 23:25. So this is pretty neutral. It has been for the. Oh, look, now they're just flicked up. Okay, so let's see what's going on there. So on the 15, I think the last time we were looking at the 15, it was on a retrace. It was doing this. Remember, it was on a retrace. That's where we last looked. So now it was a retrace. Might have been even this one pushing back up. Look, it got rejected by the 10. So by the time it got up here, it was green, and then it got pushed back down. And look, now the 5 is pushing down. You know, and again, the 5 is running ahead there a little bit. So because the 5, again, you see the 5 is running ahead, the 10, or they're taking a bit of time to catch up, is again, it needs a breather. So now it pushed down. It couldn't keep going anymore because it gets too far ahead that the 5 can only go so far on its own. You know, it can't pull away from the herd because it's not strong enough. So again, look, it has to breathe here, it has to get a breather and let these come down. Like it did here, and then the 10 came down and gave it a push. The fact that the 5 is eager to keep going is, again, an indication of the higher time frames are pushing on the 15 here. Because this 5 on the 15 is eager, it's because the higher time frames are putting pressure on it. So let's go have a look at the 30. So again, nice big drop, spiked through the 55, pushing on the Bollinger Bands. Again, the 5, the 4 and the 5 moving away. It needed a bit of a breather. Oh, look at that there. It needed a bit of a breather. Look, the 10 is now properly spilling here. The 50, the 20, they're all breaking through the VWAP. So again, this is looking like a good old spill here. So again, look at that push through. So it looks like it wants to get a candle below the 55 and confirmed. So it's quite possible that this will get below. And then these will come up to follow it, but you might get a retrace candle here, back using the 50 as a resistance rather than a support now. Possibly. You can see it going that way. Let's flick to the hour. Let's see what we said about the hour before. Okay. So there we go. Look, there. Now look at that. Look at that going. Because I think when we were talking earlier on, it was the other hours, previous hour. So look, it spiked down, it spiked through the Bollinger, and retraced back up. So it got a little bit of space on this retrace. It got a little bit of space. Look at the 5 coming down here. The 5 is wants to tear down. The 10 crossing the VWAP. The 10 hadn't crossed the VWAP on the previous hour. Now it's crossed the VWAP. And again, here's the 20 turning down as well. So again, the 20 seems pretty eager to go here as well. And there's look at the low, look at the EMAs, the 20 EMA there. look at how much they're curving there. And again, they don't curve too quickly, too easily. So you can see there's a lot of effort in getting this candle down. It looks like it wants to break. It looks like it wants to break the Bollinger Band. Now the day is turning at the end of this hour, so it looks like, excuse me, the hour wants to put enough pressure on the 4 hour so that when the day turns, is the 4 hours already turned. Because if the day can hammer on the last hour, it pushes on the 4 hour, and the hour on the 4 hour can hammer on the 12 and the day to turn with them. Because if the last hour of the day is up, or the last 4 hour of the day is up, it makes it more difficult for the day to stay going down. So it's always a good sign when you see the hour and the 4 hour putting pressure on the 12 and the day at the end of the day, you know. So unless they put too much pressure on, if the 4 hour pushes way too far, it's going to have a retrace for the first 4 hours. That can happen as well. But let's look. Let's look at, because remember I said that it wants to come down and maybe get a touch on these. So I wouldn't be surprised that by the end of the hour that it gets to touch on the 55 and the 50. And the 200 here coming down is helping clear the pathway. It's neutralizing think about it like waves. There's this bigger wave moving slower, and then there's these waves, the 55 and the 50. They're moving a little faster, but they're not as big. They're cancelling each other out. That lets the lower waves come down, and so you can see the play of it there. Yeah. So now the 4 hour. Yeah. Again, as we were saying, the 4 hour coming down to the 10. There's no doubt. I'm sure that when this comes down. Okay, I can see one of two things happening here. Is the 10 is either going to stop this, it's either going to stop this in its tracks, or is going to push through, and the 10 flips. So I'll be watching now when the day turns, is if the 10, this one snaps down, is it's looking good for continuation, and you get a strong push down. And here's the 50. So you can see the 50 coming down. If the 10 turns down with this, I'm pretty sure that it will continue down without much of a retrace. If the 10 doesn't turn and it blocks this, it's quite possible that there'll be a 4 hour retrace because it's going to have to create a bit of space and then push down again. So we'll see. We'll see. I think the real battle is here though. See here? Look at how these are all gathering. Is the 55 EMA, the 20 EMA, 21 EMA, and the 111. The 111. Let me just check this is it the 111 or the 144 weighted? It's the 111. It's the pi cycle 111 here. Okay. Look at this here now. Look. Definitely wants to have a go at this before the hour is done. Anyway, okay. So how does this do? How does this do for a target? Is definitely take your profits here. Is it worth going in on a short here? Personally, I would have preferred to gone in here or gone in here. Is the fact that this is coming down like this, it's great, but again there could be that retrace. Remember I said it could get down and you get that retrace. So I would wait. Actually I do two things. Yeah, is the first option is you can go in here. But you got to be willing to bring your stop loss back up, way back up here. Because even if you get a retrace, it's not going to break this. So that you hold your position, and even if you're in your stop loss a little bit, that's fine. It's not going to break this. Let it work its way through. So there's that. Or you don't go in and you go, look, I missed the top here. I missed the swing. I leave it for now. And the reason being is that you got 1, 2, and then this is 3 on its way. So a good time to go in is here. Then you got 1, 2. 2 is a good time. When it's moving away is a good time. Here it's already in that first, we talked about that first push of 3 when it's on the run. So this is 3 when it's on its first run down. So you got that run down, and this is the third option. You let it run down, let it find where it wants to go. It is going to do a retrace. At some point, it will do a retrace. When you see the top of the retrace, there's your entry point. And again, you pull your stop loss up. Doesn't have to be all the way, but up far enough that you just let it move on. So they would be my 3 options. And look, you can see it's spilling now. Look at that. Or you just wait. You let it do its thing. Go, I'll catch it at the bottom. Look, there it is. There it is, having to go with the 10. I think it's just going to push through the 10. I think. It seems very eager.
That was my plan, just to catch it at the bottom again.
Yeah. Especially like, especially if you're just getting into it. It's stressful. So going in now is stressful. Even though you know it's not going to break this. I know it's not going to break this, but it's just when you see it going into the stop losses, you're just like, oh, don't want to. You're better off avoiding it, and it's also just disciplines you. So if you wanted to go in and avoid the stop loss, is you wait for this, because remember the. Let's pick an example here. There's a perfect one. Look, that's what's going on now. Is that push down? Okay, there's lots of sideways there, but not lots here. A little bit of here, but here's the push down it's doing now. It's going to hit a bottom, and it's eventually going to do a retrace. And this is a retrace. Now you go in here, your stop loss is here, and look, you're not in a stop loss battle at all. So that's really what you're looking for, is let this tire itself out. When you start to see a retrace, hop in, and then pull it back. And most likely is it's going to break the line here. Is at some point it might come back up, retest this line, and when you see it retesting this line, that's your time to go in and then let it go down. And you're just avoiding the stop loss battle. So that would be the smart thing to do. Or wait. So now, where are you going to go in? Where are you going to go in? This is the challenge here. I'm going to go back to. Here's the 4 hour. There was that. There was that there. And the big spike through. So for sure it's going to come to the bottom of the Bollinger Band. For sure it's going to come back here. and excuse me. Has a tendency when it hits the Bollinger Band to spike through. Now I'll go to the 12 hour. Again, here, if I went all the way back to here, 160. Bollinger Band is 180. Okay, so I think if we, probably what I would be doing is I'd be probably looking for an entry point of 170. Again, here's 161. I'd probably be looking for an entry point of 170, and I would dollar cost. So I'd have a portion at 170. I'd have another entry at 165. I'd have another entry at 160. So let's say I wanted to trade $1,000 here at 10x. Is I put in, and I don't want to put all the 1,000 in to start. At 170, I put in 100, 10x. Is at 165, I put in another 100, and at 160, I put in another 100. So if it comes down and hits all three, is I've got 300 in the game. Okay? I might even do another one at 170, to be honest. 170, 172. Yeah. 60, 65, 70. Yeah, no, that's it. That's it. I might put my first one at 172. So if it hits all three, I'm in for 300. If it hits two, I'm in for 200. If it hits one, I'm in for 100. Doesn't matter. Doesn't matter. Is the fact is that if it hits one, say 170, my liquidation is probably going to be around 160. Okay, it goes down further and it hits my 65. Okay, well now my liquidation is 155. Okay, it comes down and hits my 60. Okay, and my liquidation is probably about 152, 153. So it gets me in, and it pulls my entry point down. So while I started at 170, if it hit all three, it would probably pull my entry point down to about 165, 166, 165. So my entry started at 170, but I get it down to 165. It bottoms out at 160, and then again, it'll be a spike. It turns around, it goes back up. So now I've got 300 in the game, and I've got an entry point of 165. And my stop loss would have gone all the way down to, or my liquidation would have gone all the way down to about 152 or something. Well away from it. Is I might even put a little bit in the margin, put another 200 quid in the margin, and it will pull my liquidation down to 145. So I'm miles away, and lets me get in. So now when it starts to go back up, is I would be looking for the bigger game here. Okay, so the bigger game is the breakout. So let's say, I'll put a marker in here, yeah. Let's say 165. 165. There we go. So let's say I got in here, yeah. So look, you got your wave, comes down. You got your wave, it comes down. Okay, 165, and again we're looking at comes down. You might get another little wave, you know, and I would still keep my stop loss quite low, because again you want to watch for those fake outs before the breakouts. So it comes down, but again I still don't think it's going to break this. So even if it was a fake out, if it came down one more time, I still don't think it's going to break 153. So I'd make sure that I have my liquidation below 153. That's the simplicity of it. So look, you got this wave here. You might get a little wave here, or it comes down and then it comes like this, and then it breaks out. So now if it's going to break out, is I'm not looking for the win here. Is you take the previous impulse, and this is the main previous impulse. I'm going to do this in stages. I'll be looking for an overall target. It's not going to do it all in a day. An overall target of the next impulse here is probably going to go up to $3.03, and between $3.03 and the 272 is $4. So between $3.30 and $4. You know, it's not going to do it all at once. So that's the breakout. But now when it comes down here, it's finalizing its A, B, C. Okay. So now is excuse me, where's the next local where's the next local target that you can measure? Because you don't want to put it, unless you want to wait for weeks for it to hit. It might be a week or two, but it's still hitting that bigger target. Yeah, is how do you measure? Where's the next target after this? Okay, so A, B, C. So now look at this. This is the final correction, but this is the last Elliott impulse wave. So we'll measure it off that. Here's the bottom. Oh. Here's the bottom. Here's the top. Okay. And I would suggest that when this breaks out, it's not just going to go to here. So I would suggest that is most likely going to go to 285. So when you have that breakout, is my target from the entry point down here is I'd be looking for a target of $2.85. That's what I would have. So I would have that.
So my target was 325, so I went far off yours.
Very nice. There you go. Yeah, spot on. Spot on.
But I think what I've worked, this might not make sense to you, but I think what I've worked out, so I was trying to do like a longer low leverage trade, right?
Yeah, totally. Yeah.
I think maybe getting in as it's going towards Mountain Peak rather than Skyline is where I've kind of gone a little bit wrong. Well, not wrong, but
no.
Does that make sense?
Yeah. You what you're saying is you prefer to get in here and play it all the way down.
Well, I was more thinking about getting in at the bottom before, like, as in the three, like looking for the next 3 steps up, basically.
Yes, absolutely. Yes, yeah, absolutely. Yeah, for sure. And then I think this is where we're going with this.
Yeah, it's going to go down to then. Yeah.
Yeah, and this will bottom out here, So what it will be, it'll be third drop. So first drop, see this red candle here? This is second drop.
Yeah, and I've got my order set for like 170 as well, so I wasn't far off there either. So
yeah, there you go. And did you get how much of your overall that you'd like to put in this trade? How much of it, as a percentage wise, are you putting in at 170?
Well, I'm going to slightly tweak that now after listening to you as well.
Yeah, don't load up, because it might not get to 170, or it might go to 160. So scale it. When you put your limit order in, you can put in multiple limit orders. So you can put a limit order in at 170, another one for 165, and another one for 160.
Yeah, cool.
Okay. And then and then hang on a sec, and then think about it. Don't put it all in those 3 trades. Don't put all of your money in. Don't load up in those 3 either. Is think about get position. Let's say it drops to 170 and it turns. Look, those other ones are not going to be met. Then you can start dollar costing in quicker to catch it. If it goes to 165 and then you see a turn, look, you can put in a little bit more, not all of it, but a little bit more then, and catch it as it turn and goes up. And then you dollar cost up as it goes through the retraces. Do you get what I'm trying to say?
Yeah, totally.
Yeah. Like it just gives you a lot of space to be adaptable. Sorry, go on ahead. What were we going to say?
Yeah, I got a question over the limit orders.
Yeah.
So let's say we are thinking about the 170, and just in case it happened to be like it's a big wick going down, like similar to the ones that we had in December 13 and December 3rd.
Yeah.
Like it worked in my way, but I'm just worried that you get in at 170, it had a wick, went all the way to 140 or something, you get liquidated.
Yeah.
And then when it goes up, you're waking up in the morning, it's not there.
Yeah.
How to protect yourself in that?
Yeah, well, you don't go. Well, first of all, don't go to bed with your liquidations open. This is part of this is why I do sleepless nights sometimes, is because I'm in a trade, and I don't want to put a stop loss on it, because if I put a stop loss on it, it's not letting it play out. I'm in a zone where I want to let it play out. If I put a stop loss on, I wake up in the morning and okay, I've lost a little bit, but I'm more bothered that I've lost the position. So this is the challenge. Don't go to bed. Don't go to bed with your liquidations open. It's really that simple. So either don't go to bed, or don't.
But that means 24/7 you're on the market.
To be honest, this is where we all got to find a balance in the time we have, the trades that are available, and then what way we can play those trades. So there may be some trades that you might have to go. I either have to let that trade go because it's the wrong time for me, or I got to take the risk of putting on a stop loss and waking up to my position, losing my position. And that's okay, because if you've got your routine and you got other commitments, then you just have to accept that that's part of your game. Does that make sense?
It does, but I was thinking of tackling it in another way. Like, let's say I'm expecting 140 or 160.
Yeah.
And then I put a limit order at 160, 150, 140.
Yeah.
Even if the other ones doesn't get hit, but at least if there's a big liquidation wick that goes down.
Yeah, you're dead right. I do that. I do that. But while I do it, I also set alarms to wake up for 2 hours and wake up for 3 hours. There's times like I'll set my alarm and I'll get up 2 or 3 times and have a look. So do you know what I mean? And also, I know the market, so to speak. I know how it moves. I know the potential of it. So you just need to make sure that you're correct in what you're reading. And this is where the confluence of timelines, the different arc timelines, the confluence is really important. Is that if you're only going to do that on the 15 or the hour, it's like the hour can look like you got a head and shoulders, but on the daily, that's a retrace for it to go up. So you think it's going to go down on the hour, and really it's finishing a retrace on the daily for it to pump up, and you get wrecked. So your confluence between the timelines gives you a lot of confidence to know that what you're going to do, that strategy, is that you can go to bed and be a bit peaceful with it. Because it doesn't matter how sure you are, you got to look at the risk you're leaving yourself open to. Does that make sense?
Yeah.
So
Thank you.
You're very welcome. I agree with what you're saying. And you sound like you know what you're doing and you're comfortable with it. I'm just saying it to the people who are not familiar with that, is that type of strategy, you got to do baby steps. You got to do baby steps, and you got to do it with the confidence of being able to read multiple timelines to give you that security. So if you can't read multiple timelines to give you confluence, it's not such a good strategy to do, because you could be leaving yourself open to get caught. So that's the caveat I would put on it. Yeah, I'm not saying that to you. I'm saying it to everybody. Yeah. So
yeah, it makes sense.
Very good. Yeah. So, but you can see how once you settle into it, it's a brilliant strategy, because like there's like once a year you get a 70% drop. And you can see the time when that's due. You'll get 50% drops maybe once a year. You get 20-30% drops more often. But again, you can see when they're due. So they're not always. As an example, is you look at this here. And let's say this is daily rather than hourly. You've got this going on here, and look, you've got this big pump. You know you're coming to the top, and you're going to top out here. So this is probably going to go on for a number of weeks. Is you know that there for this amount of time there isn't going to be that big a drop. You know there's one coming, but this has to play out first. So you could have a bunch of weeks where you know there isn't going to be a drop that's going to go past 20%. So that gives you comfort. Is you know that when it does drop, it's going to drop down to first spike and then second spike. So you know the second drop is probably going to land around here. So you're more cautious as you get to this, and to be honest, you're looking to flip. Is you're for the most part you're a bull on the way up, you know, and then you're getting ready to turn. So by the time this turns, you're a bear now. So now what you're looking to do is when you go in your entries, your stop losses are going to be above skyline. So your stop losses, if you play this all the way down and put your entry above skyline, you're as safe as houses. Any short you do and put it above skyline is, no matter how much it retraces, it's always going to go back down until it hits the bottom. So you get what I'm saying. I wouldn't put up there all the time, because you're putting it down here. It could cost you a fortune to get it up there. But you understand the principle of what I'm saying. So, okay. Anybody any other questions? Will we go and have a look at Bybit? Okay, let's go have a look a bit at Bybit, yeah. And I think what I'm going to do is do more of this as well. I think I need to do more of this with you guys and really just get into it more with you. So I know Ethereum is a solid coin for everybody. So I think one of the things I need to do is at least do one solid session a week where I do this on Ethereum. And on all the regular coins, I think what I'm going to ask you all to do is maybe send me in, what is the coin you're trading? Tell me the coin or coins that you're trading, and I'm going to look at them all and get a good sense of what way can I do regular sessions with those coins. That would be sweet. Okay. So I'll send that. I'll send that question out tomorrow. Yeah. So let me just have a quick look at XRP.
I tell you what would be good to see, right, as well.
Yeah, go on ahead.
Would be you like a rapid fire, like you just trading for an hour, just watching it like live.
Yeah, just gone through it. Yeah, well, that's what I'm saying. That's what I'm saying. Yeah, that's what I'm saying. If every week I did at least one session like that on ETH, I went in, I did an hour or two on ETH, and then just did a whole review of ETH and all my indicators and just talk it all the way through. Yeah, I think that'd be really good, and do all the major coins that everybody's trading. Yeah,
that's all. Nice one, thank you.
Yeah, you're very welcome. Yeah, and it's good fun as well. It's good fun. I'm just checking my XRP. Okay, it still looks spilling down. Very good. So okay, so let's have a look at Bybit. So let me pull up a Bybit. Okay, let me pull up a Bybit. So I'm going to change the. There we go. Change the screen. I think that's it. Yep. Okay. So everybody see my mouse? Side to side. Okay. So here's actually the shorts I have in. Here's the shorts, or sorry, not the short, the long trades I have in for XRP at the moment. So I have 65 cent, 2,000, and then 63, 3,000, 60, 2,000. 58, 2,000, and 55, 2,000. So they're all my trades. So as it comes down, I reckon that this bill here, and I think XRP has a bigger drop to go than even MATIC and ETH and Bitcoin. So I think when the likes of ETH does maybe a 10% drop, I think XRP could be doing closer to a 20 plus drop to hit its target of 65 or so, and a little bit more. I don't think it's going to break this. I think it might get close to it, but that's the previous dump at 57, 52. So I have all these targets that are going to catch it along the way, and then once the 65 gets triggered, I will put a little bit in the margin, and I will push my liquidation price down even further, and just keep me well away from the bottom. So there you go. So let's say that went wrong. But by the way, let's say that went wrong. Let's say just out of curiosity, yeah, I fill all my targets. I put some money in the margin, and I push my stop loss down, and because it's happened before, and then it's like, okay, it keeps going. I'm like, oh shit, oh no, it keeps going. It's heading down. It's heading down. It's heading down. So let's say my liquidation was at 140. Now, to be honest, I'd push it well below 140. But let's say it was just 140 was my limit, and I could see it coming to 145, and I'm in the hole for a bit of red. And my entry point started at 65, but I got it all the way down to say 58, 59, and it's heading down 45. I'm in the red, and there's a bit of money that I'm going to lose. Yeah, is one of the things I've done before is I'll take a 50% loss. So I'll take a 50% loss, and when I do that, is that 50% loss? It's gone. But what it also does is that it frees up money. So it frees up money, and what I do is I'll put in another long. So now let's say it's down to 45, and I put in another long for 2,000 or 3,000. It'll pull my entry point down to I don't know, let's say 56, 55. It'll push my liquidation price down even further below 140, and again at some point it will turn, and when it turns, is my entry point is in at such a good position that because it's going to spike down, when it returns up fast. I end up in green pretty quickly, and then the money that I lost by giving up the 50% loss is I make that up very fast, so that my first 5 or 10% of the profit is making up the loss that I just took. And the reason why I would take that loss is because it frees up my money. It makes me more adaptable, so I can move my entry point and my liquidation price again. I can push it down further. It keeps me adaptable, and it allows me to move. And you're allowed to margin all the way down 50% from your entry point. So if I put an entry point of 60, is I can put money in, bring the liquidation price all the way down to 30. So I can bring it down that far. So rather than putting lots more money in the margin, is I can take a loss. I can take a loss, release some of the fees, and go in with a new entry point. So that's a way to do it. It's a stressful excuse me. It's a stressful situation. I don't recommend you to do it, or find yourself in that position. But one of the things that gives you the adaptability and the flexibility to do it is that when you're dollar costing in, and you're not in for a huge amount of money, and you can see the possibility of doing that, and it would work for you. If I load in, there's too much money in the game, is too expensive to take that risk. So when it's a smaller amount of money, is you're able to do that, and it just leaves your mind a little more adaptable and open. So yeah, just a thought. Hope you never find yourself in that situation, but it does give you more adaptability. Yeah. Okay, so Now, here we are on Bybit, yeah. So I'm going to talk through inverse perpetual. So you can see all the different coins you can trade, and this is really ramped up. When I first started trading on Bybit, there was 5 coins here. Since that, the Bybit coin is new. And then here is, there only used to be on the perpetual, there used to be like 5 or 6 coins, and they were pretty much the same. You had Bitcoin, Ethereum, XRP. What else did you have? I think you had DOT.
Hey Roy, are you moving your screen?
Yeah, I'm moving my mouse. Can you see it?
My screen's frozen. I don't know about anybody else.
I did a drop down.
Yeah.
Is that okay
frozen.
now? Can you see it now?
No.
Not in a minute.
Oh. Oh, okay. Yeah, I did a drop down menu there, so I thought that might have. Let me do a reshare again.
Cheers, mate.
Then I'm there. There we go. Okay. Can you see my mouse?
Yes.
Okay.
Yeah.
Okay. If I do this drop down menu, can you see the drop down menu? To the left?
All good.
Yes?
Yeah.
Yeah. Okay. Okay. Yeah. So all these perpetual coins here there used to be only a few. Now there's loads. So I've only noticed something the other day about this. With the inverse perpetual, you get a far better stop loss. Rona Ram on the XRP chat was saying it, and I noticed it, but she gave me the figures. It's a 2-for-1. So if I go in XRP, this is XRP, trading XRP for XRP. So when I win here, I win XRP. When I lose my XRP. But my stop loss, if I went in on a 60-cent trade here, up or down, my stop loss would be around 50% or 50. I go in at 60, my stop loss is 50. But when I go in on on perpetual, and this threw me the other day, is that if I did the same thing, if I went in on an XRP trade for 60 cent here, and I did all the same equation money-wise, value-wise, is rather than getting 50 as my liquidation, not my stop loss, my liquidation, I'd get 55. The liquidation between inverse and perpetual is 2-for-1. So you get twice as much liquidation space on the inverse as you do for perpetual, which means the risk is far greater. The risk is far greater here, and rather than winning coin here or losing coin, it's straight dollars. So you're winning and losing dollars here. So I'm always on inverse trading XRP. Again, I'm looking to build my bag. So now the space over here is the trade is really, really important. Is when you click into isolate, you have 2 options. You have isolated or you have cross. Isolated means that whatever you trade here that's all your trade. So if you're trading 1,000 XRP here, it's isolated. You're only trading that. But let's say you're trading 1,000 XRP, but you have 10,000 XRP in your Bybit account. If you click to cross, okay, you've put 1,000 into this trade, but it's a cross trade. Is you put 1,000 in, and then the trade starts to go south for you, and you start heading towards your liquidation price. Is rather than you getting liquidated, the system will automatically dip in and take money out of out of what you've got. So it'll keep feeding the trade to keep it live. So that you put 1,000 in, and this went really wrong for you, you could lose your 10,000, because it'll keep going into your money or into your coins until there's none left. So this is really risky. But there are people who use it, and there's a reason why they use it, and I'll explain to you with the bots. Is if you have a 50% margin position on a coin. So if you go in at 60, you could put money in your margin and pull your liquidation all the way down to 30 cent. How the bots would do it is that the bots would automatically keep putting trades in. Every time it went down 1% or 2%, the bots would automatically put a trade in, put some more money in. And it's a little bit more incrementally all the time. So what it does is that it'll put in 30 trades, and those 30 trades will pull your liquidation price not down to 50%, but down to 60%, simply because every time it puts it in, it's like a new trade, and it gives you a little bit more space to move. So when you're using bots or you're using dollar costing in, your initial point is 50% of the margin, but as you dollar cost in, you could pull that down to 60%. So while you went in at 60, you could pull it down to what's 60%? 10, 6, 36. You could pull it down not to 30, but to 24 if you were continually dollar costing in. Does everybody understand what I'm saying? Do you get the idea? And
yeah.
The logic with that is that it is very, very seldom that price action, and this is with the bots, very, very seldom that price action will go down 60% in one go before it retraces back up. So let's say it drops down 30%, okay, and then it goes back up, and your entry point it meets your entry point, and you start taking profit. So now you've taken profit again, and let's say it drops down 10% and goes up 50%. Okay, so you're 20% in the red, but you end up 30% in profit. And that the bots give you that mobility to do that up and down. And the odd time that you do get caught, maybe you get caught once a year, is you get knocked out with your bots, but it's only once a year. But the overall value of your wins is you end up winning far more than you do losing. That's the basic logic of it. So why am I telling you this? Is that some people play the same with their cross account. Is they'll put in a trade and they'll make sure they have enough in their account so that if it wants to go down, is that the system will automatically keep taking it out. It'll keep pushing their liquidation price down, and they know they have enough money in their account to pull it down 50, 60%. And that they're gonna play that they're gonna play that leverage. And sometimes they get caught, but more often than not is they win, and the more wins they have is that the time they get caught, it doesn't matter so much. Not a strategy I'd like to play, because it's a bit of a lazy one. It's a bit of a lazy one. It's somebody who's got a general form of TA, and they're just a bit lazy with their trades, and then they don't mind getting caught like that and possibly being in a trade for weeks before it comes out. So I don't recommend it, but that's what the cross is there for. So always isolate it. So you're only risking the money that you're putting in that trade. And then your X's here is, again, you want your X's. I generally use 10x, and in most people, when they're doing trading, they're generally trading between 5 and 10, or even between 5 and 7. Is you will get some people who want to do 15, 20 X's. Is what happens there is that your liquidation price gets tighter. So your liquidation price gets tighter, means you can get knocked out much easier, and you lose your money. You lose your money faster. And then equally, your profits are greater for sure, but you're going up in risk. Some people do 50. I told you I did a 50x yesterday. my second trade, yeah, it was crazy. It was crazy to do it. But I also knew where it was. I saw it turning up. I knew it was the moment to go in. But man, it was stressful. It's not the type of trading that you want to you can do sustainably. You know, when you're going to do long-term trades, where I think it was Taylor was saying it there. He's looking to go in on a lower leverage and spend longer in it. Is you go down and you do the 2 or 3x, and that's when you're doing legendary trades that might go on for a month. Is you'd only do a 2x so that you're not paying a fortune on interest. You're not paying a fortune on interest. It's a bit like a boosted spot trade. You know, you do a spot trade where you buy at the bottom, you sell at the top. Is with a long leverage where you're gonna be in it for a month, even 2 months. Is you're putting in X amount of money, you're 2xing it, and you're just letting it ride up. And you're paying interest on that, and the interest can add up because it's going for so long. But then the profit you're making also is also very good, and you end up it's boosting. It's like a boosted spot trade, but the profits can be very good on it. Again, you just need to be patient. You need to be willing to sit and just let it do its thing. You're looking at it every day, but you're not messing around with it too much. You know, you're just letting it do its thing. So isolated, and then anything from 5 to 10x. Yeah. Okay. So now is your limit order. Is you can set your limit order to go in when price action hits a certain point. Your market order is you can go in straight away. So on the limit order, they call you a market maker, and a market order, they call you a market taker. So you pay less here. I think it's 25% here and it's 75% here on the interest. Now it's 25% of a very small amount and 75% of a very small amount. So they're both very small amounts. The limit order is you're setting your figure. Your market order is you're looking at the price action. You see it's time to go in and you want to go in straight away, and then in you go. Your conditional is exactly like a limit order. Is the only thing is you're hiding your trade for a period of time. So let's say you're a whale, and when you make big moves, people are following your moves and they can play with you or they'll play against you. So you don't want people playing against you. So rather than putting your limit order in, and here's the books here, here's all the trades. If you put your limit order in, it will show on the books. And there are people who read the books and trade from that. So on a conditional is let's say you want to go in on a long at 60, okay, and you don't want it to go on the books yet. So you will put the long in on a limit order long in for 60, but you will put the conditional in for say 55 or 56. So it won't show on the books until price action hits 55 or 56, and then it gets put on the books. And your when it hits 60, then it's triggered, and then you're in the trade. So that's what a conditional is, yeah. So it just hides you from the books and lets you go in without people trading against you. Okay, so now here's your limit order. Is again, let's say the price, just as an example, I want to go in at 60 cent. Is I'm 10xing, isolated 10x, limit order 60 cent. Is I'm putting in 2,000, okay, and then I'm doing a long. So I'm going to buy. Now it's asking me my take profit. Okay, so let's say is my target is, just keeping it simple, 90 cent. Okay, so there's 90 cent. and then it will tell me what my expected profit will be. So on my 2000, and this 2000, because I'm 10xing, this is 200 XRP 10xed. So this is with me the short-term loan I'm getting is I'm using 200 of mine and 2000 of the exchange, and that the profit here will be 333%, and it will be 1111 XRP. And then it asks me, do I want to put a stop loss in? And you can put a stop loss in or not. Is a lot of times a nice reasonable stop loss is 15%. So 15% stop loss is is my long is going in at 60. Is that right? And my stop loss is 59.11. Really? That's not much, is it? 60. Okay. Let me make this a little bit more realistic and see what it says. So price action is 80, 74 at the moment. Okay.
Because it's counting 15% of your XRP, not the exchange.
Yeah, no, I know that, but I suppose what I'm trying to say is that let's say I'm going to do I want to go in at 85. Let's say 85. I think it's going to go to 85. Yeah, but 15%, I'm getting less than one cent in space. That doesn't sound right, you know. So there, look, I'm putting a limit order in. I'm going to making it a bit more realistic now. Okay, so there, it's 85. Okay, I'm going to say my profit is. I'll take $1 now. Okay, so there's 476, 192%. Okay, and 15%. See 50, yeah. See 15%. So there you go. There you go. So that's more realistic. So my entry point is 85. Now I'm going to do a 15% stop loss, and that means my stop loss is 79.55, which means that when my trade is triggered at 85, it can retrace back to 79.85. Basically 5.5 points, 5.5 cents it can retrace. And if it retraces back to that, I get knocked out and I lose 37 XRP. That's my stop loss. So my risk in that is 37 XRP. And the space that I have to move in is that 5%, or not that 5%, that 5 cent. If I did 5% is, well, see, that's not too bad either. 5% brings it to 80.35. I have 5 cents. 15 is not giving me very much more. 25 is 78.81. You can see how quickly it changes. But not by very much, so 78.81. 50% is 77. Okay, so look, sure, why would I risk more than 5% if I'm going in at 85 and 5% is allowing me to space of 80.48, so 80 and a half, where risking 3 times the amount is only giving me an extra point. Risking 25 is again giving me less than another cent. You get what I'm trying to say? So 5% is I think very reasonable there. So personally, I would play the swings. I would play the swings and make sure that I'm in a position that the price is going to turn down, and I would keep I wouldn't put a stop loss in. So I would wait for the bottom. You know the strategy. Wait for the bottom. Dollar cost in small amounts, and then allow my liquidation price to move. But anyway, okay. So has anybody any questions? If I press long now, that trade will go in. No, that's telling me that because you see this here, risk alert. The current order may encounter the following circumstances. Please confirm before you proceed. The current order may be executed immediately as a market order. the take profit and stop loss conditions you place may be invalid, is it will do it. It's never a maybe, it will. So basically what it's saying is that my limit order here is too close to price action, that it won't go on the books and hit and go in. It's not going in the books on time. That's basically what it's saying, is that I'm putting in the trade too late, so that if you want this trade to go in, it's going to go in immediately and it will go in as a market order. So what that means is that it's not that it's going in immediately at 85, it's going in immediately at 80.42. So it's not a limit order at all. It's a market order on where price action is right now. It's a little bit of a con here, because they say may, and it's like, no, it will be. It will be a market order. So if you want it to go in at this price as a limit order, do not press confirm, or you're just going straight in.
Seems like it's still far enough away. Why does it do that, though?
Yeah, I agree with you. Yeah. It's quite possible that books, and this is my guess here, is depending how full the books are. Dependent is if there's a lot of other people who are filling the books, and there's a lot of quantity. Yeah, is that your order gets pushed down. Now, if you were putting in 500,000, I promise you they wouldn't say that. Do you know what I mean? Like, it's a there is the larger amounts get filled up first. So the bigger your trade, the more likely it is to get in, because it'll go, if it's a big one, it'll go to the top of the queue. And then the smaller orders get pushed back. And to be honest, that makes sense. Is all those small orders are there's a hierarchy to it, you know. So yeah, so
yeah, that makes sense.
So yeah, so there's the limit, and then there's the market. The market order is you just go in straight away, and that's it. It's fairly straightforward. Has anybody any questions about it? Mm-hmm. Now I know here is, see if you click post, and I press this here. Okay, okay. Now I'm not sure about this, because I know when you press post only is what you're basically saying is that it's only to go in as a limit order. It's not to go in as a market order. So now I believe that if I press confirm there, and I've not tried it, and I will try it another day with a small amount just to see. Don't do it now. Is it won't go in as a market order, because you're basically saying post only. But I think the issue with this is that, okay, it's going to go in as a post only, but the system is warning you is that it's most likely that your limit order 85 will not actually happen. Do you understand? Is that it'll be too far down the books that your order won't be taken, because you can have times when your order is not taken. Everybody understand? So
yeah.
So I suppose the trick with the limit orders is get them in early. That's the simplest way to describe it. The earlier you are, the better it is. Or else just go in on a market. And a market is again straightforward. Is with the limit order, look, it's actually an order price. The market order, it's the price that the market is at. So then it's just your quantity. And then there's your buy, or there's your sell, you know, and that opens up your take profit. And again, sometimes I put in take profit, and other times I don't. Other times I just want to see where it goes, and I know I'm going to watch it, so I'll take profit when I see the price it's at, and then equally with the stop loss. Yeah. Now it's a really good. Here's one about the stop loss and liquidation prices. I'll play the swings. I'll play when I know I'm in a good space. Yeah. And again, sometimes I'll get caught. Sometimes I'll get caught on the Elliott Waves, where I think 3 is the peak and then 4 to 5 comes in. Sometimes I get caught in that, but my strategy absolutely allows for that, so there's no problem there. But if I was going in the middle of impulse waves, is I wouldn't be comfortable doing this. And that's what I was saying to you about the earlier on with MATIC, is where's your good entry point? Is you want to wait until that pump down finishes, does a retrace, and then go in, because the retrace, now you know it's going to pump down again after that. So it doesn't challenge your stop loss or your liquidation price, not at all. So I'm very mindful of the strategy I play has to be on the swings. I like to play the swings. I don't like to go in when a trade is in and that I'm chasing it. So if you ever find that you're chasing the trade, stop. Just don't go in. Is find where it is on the impulse, wait for it to retrace, and then you go in on the retrace. And it's a much safer way to play it, yeah? And then this strategy really works for you. But if you're going to chase trades, that's where you get wrecked here. Because you're chasing a trade, you might not know exactly where you are or where it is you are totally leaving yourself open for price action to turn and just knock you out. So again, I'm putting caveats, I'm going to keep repeating it, is stop losses at the start. Oh God, I'm so torn in this, because one part of me is saying stop losses keep you safe, you know, and it does. It reduces your risk. There's no doubt about it. But I'm just thinking about the amount of trades I lost, the amount of money I lost getting knocked out of stop losses. Where if I'd have followed the strategy that I do now, is I would have made an awful lot of money, and rather than lost it. Definitely, I would have got caught at times and I would have got wrecked for sure. But I would have made far more than I would have got wrecked if I'd have not got knocked out of my stop loss so often. So now, again, I know I'm repeating myself, but it's just because it's money, and it can be a lot of money, and the money can be important to you. So I cannot say enough to you. If you're going to do this strategy, is you have to do it at the start with very small amounts of money until you learn it. And then when you learn it and you're going to use money that makes a difference to you, you still have the dollar cost in. You'll never do this strategy loading up, no matter how much money you have. Never do it loading up, is because that's where you get wrecked. So there you go. Anyway. So has anybody any questions? It's fairly straightforward. No questions? Okay. Okay, so so let's just have one quick look at MATIC, just out of curiosity, just to see where it is before we go. Where is it? Sorry, I'm just looking for MATIC. Had it there? Here we go. There it is. That's it there. Okay. Okay, so, oh, it's turned. It's the day. The day is turned. Okay, so here we are on the day. It's an up candle for the moment. Let's just zoom into the hour, see what the hour is doing. So the hour, do you remember we were talking about this? The hour was coming down. Remember the 200 and the 55 and the 50? And look, it came down and it hit the 55 like I said it would. And look, here's the retrace. It's retracing back up. Look, there's the VWAP coming down. We're half an hour in. So let's go to the 4 hour. And again, the 4 hour, look, it broke. Remember we talked about it breaking the 10? And possibly getting down how far? I was thinking there's the medial, there's the 55. Didn't even get here, it got to the medial line. Medial. So look, it spiked all the way up here. And then look, it's already getting pushed back like this. The 10 didn't turn, but it does look like the 10 at the moment seems like it could be resistance. It looks like it's resistance, and the reason being is because it spiked through, and then the body's after coming back, and there's the wick at the 10, and that would fit in with the 4 hour spilling. Here's the spill. Here's the 5, and look, the 5 is still cutting through the VWAP. So even though the VWAP came down, the 5 is now cutting through the VWAP on the way down. There's the 4. And again, if this stays like this, now look, here's the 10 coming around here and being resistance. So again, this could be a really good sign, yeah? Now we'll have to see now over a while is this medial line. If this medial line breaks, you know, and we get, there'll be a hit here, there'll be a resistance, so it gets stopped here. It'll get pushed back up to test this medial line as resistance, and if that gets confirmed, then I think we're looking at a bigger spill all the way down to the Bollinger Band here. Get the Bollinger Band coming down here. And again, this is the arc, so this is the peak, so this all fits in, and the Bollinger Band is a target. So there we are down at 188 anyway. Spiking through to the 200, 186, 187. Let's have a look at it on the 12 hour. Is the Bollinger Band on the 12 hour is down at 180. So now again, it didn't hit the top of this Bollinger Band, but look, here's the 20 on the 12 hour. Look, there's the 20. Even more solidly, look what stopped it. The 20 stopped it coming up. So now the 20 is crossing over the VWAP. So now the 20 crossing the VWAP on the way down is a very solid sign of downward action. Now here's the 5. Now look, on the 5 looked like it might be resistance here. And again, it's cutting through the VWAP. So again, when we see that turn, is if this actually decided to go down a bit more, got down a bit, is you'd see this 5 begin to bend. You'd see it over the 12 hours bending, yeah. And again, look, the 10 is up slightly, but to be honest, it's pretty neutral. Pretty neutral. So that's the 12 hour, and then the daily. Okay, so look at this. Look at this. So now we had the 5 or the 10 here. The 10, there you go. You can see that there now. I've highlighted it. The 10 turned here. Remember, the 10 was what stopped this, spiked through, rejected it, spiked through, rejected it. And look, the 10 is still, and this is on the daily, so the longer the time frame, the more solid the moving averages. Look how solidly the 10 is pushing down here. Okay, and now the 10 and the VWAP are pushing at the same time. Okay, now there's the 4 EMA, there's the 20 MA, there's the 5. Look at the 5 all the way down here, sideways. Okay. Okay, so now we were talking about the 4 hour was looking like it's spilling. Remember the spill. Here's a retrace. So now the 12 hour I think the 12 hour needs its spill candle. So this is its drop. Here's a retrace. It's quite possible that by the 12 hours is done, is that this becomes a spill. Or well, you can see it moving there, look. Or that this becomes a little bit of a sideways candle. It doesn't stay within this range. And then the next 12 hours is you get your spill. But we need this. You'll need to see one of these on the 12 hours. So it's quite possible it's that one, because look how much. If we go to the smaller time frames, let's go into the half hour. Okay. So yeah, this is part of what I was thinking here. Now I'll do the hour for a moment, because I want to point out what happened here. So look, here's the hour. Here it is. 12 o'clock comes. Here's the retrace. VWAP comes down. Retrace comes up. Spikes up to $2.10. The 5 on the hour. Look at this. There's the 5 on the hour. It didn't even get to the 5 on the hour. So it's really good sign that the 5 on the hour was able to stop it here, or it didn't get as far. Yeah. And again, the 5 on the hour is also crossing the VWAP. There's the 20. They're all crossing the VWAP, which is a good sign with regards to crossing the VWAP and going down. Yeah. So now, this is the hour. Come up. And one of the things I'd look for is that, okay, within that hour, what way does the half hour behave? Okay. Now that was red and now it's gone green. Okay, this is what I was looking at. Is here's the half hour, and it comes up, and then it retraces. Now this turned, and I was looking to see whether the half hour would turn red, so that the second half of the hour is a red candle rather than a green candle, because that would indicate that this candle isn't going to last. The green candle on the hour isn't going to last. Is the next hour candle will be red. So if this half hour candle, I know it's green now, it was red. If it starts to push down here, and this half hour candle goes red and gets down a bit, it's a strong indication that the next hour will be a red candle, and it'll be coming down to challenge this again. So you've already got 2 spikes through it. So it's possible if the next hour is red, is that you're going to get your breakthrough. Possibly. So let's just have a quick flick to the RSIs, and we'll just talk through. So let's go and let's have a look at that half hour and see. Was it flipped and flopped? There you go. Look, so it was down. Look, it's up. And it's flipping and flopping. Is at some point it'll decide what direction it wants to go in. So let's just have a quick look at the 15 minutes, because the 15 minutes is probably up. Okay, so the 15 minutes is up, but look at this. It's down, it's up. It's most likely that the next 15, well, not most likely, it's possible. Sometimes you get this zigzag where the next 15 minutes will be down. So if the next 15 minutes turns down, it can pull the half hour down, which can pull the hour down. So now you get the hour coming down, which will pull the 4 hour down. So now this is looking at the 4 hour here. This is a fairly committed angle. So you look at the angles and you can see this is fairly committed. So I'd be looking at the next hour and how it behaves, and if the next hour can move this, there's a strong possibility it's going to budge. Sometimes it takes the last hour of the 4 hour for this to budge, yeah. But that's fairly committed as it is. We'll see. And the reason I'm talking about the next hour or two is because we're going into the 12 hour and the daily. So again, we want to see if this is committed to this, the 12 hour, and is it just the first half of the day that's committed to this, and maybe the second half will be down. Now we know it's in a spill, so we know that and I know that either this one is going to turn, or the next one is going to turn, because the arc and the Elliott wave correction has to complete itself. so it's in a correction, and it will complete itself. It's just a question of is how long are we going to get another day of sideways? That's really what I'm looking at here. Is this going to just do sideways, and it's just we're in forever trades that are taking something that should take a day or two is taking a week. So here we are in the daily. Okay, and again, look, you can see the daily. The daily is not so committed. You know, the day is not so committed to that. It isn't that big sharp turn. You know, it can be difficult for the day to change when it goes like this. I have seen it, but there's a lot of volatility to pull that day up and down. Generally, when it commits like this, it's really hard for it to turn. You know, but this here is basically saying, well, I'm up because the smaller time frames are up, but I'm not committing myself fully yet. So normally the daily can take a few hours or even the first 4 hours before it really settles into what direction it's going to go in. Yeah. So that's why I like to see the change of the day, because it's important. This one's always important to see which way it's going to go. Yeah. Okay. Now one more thing while I'm on a roll is the weekly. The 5 day in the weekly is the 5 days up. So the 5 day is up is, and again, looks like it's going to move a little bit there. It's this. There's the 12th to the 17th. This is the 17th. So this is the last of the 5 day, and then this is going to turn. So again, this will be interesting to see now what happens tomorrow, after tomorrow, and what way this wants to go. You know, so you can see that it's in a general. You can see that it's in a general uptrend. So let's see what way it wants to go. Excuse me. And then the weekly. Again, here's the weekly here, and again it's up. I would imagine that this has done a little bit of flip-flopping this week, and it's from the 6th to the 13th, and then the 13th to the 20th. So we're a few days, we're 3-4 days into this, and you can see that the trend here is slightly up, but this also had the big dip in it. So you can see how while the trend is up, is it didn't stop that big dip, you know. But overall, MATIC, like you can see where MATIC is going with its basic trend, yeah. Like that's its general trajectory. Remember I talked last night about the volatility of the impulse waves, you know. But look, it still goes up, still goes up, still goes up. So imagine holding MATIC for 4 years. Even if it has a big up and a big down, it's going to have another big up and another big down. So the longer you hold it, it's just continuously going up and up and up, and it's exponential. So you held on to your MATIC for 4 years, and they will be worth a lot. If you did nothing with them but just held on to them, is well worth it. Okay, all right, guys. I'm waffling away here now, so I will say goodnight to you. Yeah, let's do more of these live trades and see where it all goes. All right, so
thanks, Roy.
have a great day. Cheers. Bye bye.
Thanks, Roy. Thanks.
Thank you.
Thank you. Bye bye.
Thank you.